Welcome to Wealthy Mind, where we talk about all things finances, the good, the bad, the ugly, and the surprising. Welcome to Wealthy Mind Podcast. I am your host, Misty Rosegold, International Success Coach. And today I have with me Devin Kellenberger. Did I say it right?
Yes, that's right, Misty.
Okay, good. I'm so glad I didn't butcher it.
You got it perfectly. It's a German name.
Well,
13 digits.
I should be able to say it because I'm part German, but I've never tried out the language. So anyway.
Love it.
Wonderful. Well, thank you so much for being a guest on my podcast today.
Of course. Thank you for having me. I really appreciate this opportunity.
Well, I'm so looking forward to this conversation and the topics that we have. So before we get into that, would you please tell our listeners, what is your business? What do you do?
Yeah, thank you. So my business is I'm a financial advisor with Edward Jones. Actually started my practice in January 13th of 2023. So relatively new into the industry, but I have a passion for finance and markets and economics and helping people. And so I've never been happier in a profession my entire life. And I love the company I work for, Edward Jones. So yeah, this role is perfect for me and manifesting my purpose in life.
The fact that you are happy is everything.
100%. I did stuff that I did not, it paid me well, but I was not as happy for quite a long time. So I'm so grateful to be doing what I'm doing now.
Well, I can second that. I love what I do. So welcome to the realm of loving what you do because it's a game changer.
It really is. It really is. I don't dread going to work anymore. I love it.
Yay, that is
Yeah.
music to my ears. Wonderful. So, as a financial advisor, what are some of the topics that you're most passionate about?
Yeah, so I have a background in studying both individual securities and general market behavior, human psychology, behavioral economics, things like that. I actually studied finance and economics in school, in college. But out of college, I did not pursue a career in that right away. I kind of focused on getting something that was more steady and that I could build a career in it first, because I felt like trying to jump in as a 23-year-old kid doing financial advisory for people with could be millions of dollars. I didn't feel like I would have had the credibility to really do the job well, in spite of the passion. So after, let's call it 7 to 8 years of investing my own money and being in a profession that was not financial advisory or financially related, and having success, the logical next step was to do it for other people.
Yeah, sounds logical to me, but thank you for being responsible in that space. Because some people don't put thought into, hey, am I credible?
Yeah. Well, I mean, there is something to the fake it till you make it, I suppose. But
A little bit, a
a
little
little bit.
bit.
Yeah. Yeah.
Definitely. So you said that you made your own investments. Was that in the stock market?
Yeah. So my initial job out of college was working for Enterprise. I did that for, from 23 till 30 or so. And when I wasn't helping clients to rent a car or selling our fleet services, in that last role that I had with Enterprise, I would just obsessively study stocks, stock market, financial markets, economics, all with the goal of, to be quite honest, because I didn't really like what I was doing, to retire as soon as humanly possible. I was like, if I can just save this amount of money and get this return, I can retire by 35. That's what I was thinking when I was 23, or 40 or whatever. And so I kind of like obsessively saved and obsessively invested. I mean, now I understand the benefit of, let's call it emergency savings or something that's not in a risk bucket for investing. But at
Mhm.
that time, every single dollar of my paycheck, net of my expenses, went into stocks. So,
Wow.
the most aggressive stuff I could find, more or less. And so that's kind of how I got steeped in it. I just learned by doing at the end of the day, and by constantly studying. I would About 2 years into my career, I had a 1 hour drive to work. So I would listen to podcasts. I would
Mm.
listen to audiobooks on Audible, whatever I could to try to get an edge in both knowledge and in behavior in order to, save and invest and make the most money that I could. Um, I was fortunate to have some success, and also I was fortunate to be investing in a time where the financial markets and stocks just simply did astronomically well. When you think
Mm.
about it, between 2016 and 2022, the broad market was returning 17% a year. So a little bit of it was luck, but it was also due diligence, hard effort, studying, obsession, let's call it too, because I would drive, I would listen to a podcast, I would drive home, I'd listen to a podcast, I would get home, I'd be watching YouTube, I'd be listening to stuff, I'd be reading Twitter, reading research, etc. So, a healthy obsession is a good thing to have. It really gets you to where you want in life. So,
Yeah, for sure. And thank you for sharing that obsession with your clients. I'm
I
sure they appreciate it.
yeah, I think most of the time they do. Sometimes they're probably like, "Hey, dude, I get it. Shut up. You know a lot about stocks. Let's let's move on." uh,
Well, good on you because I know nothing about stocks. I know that they're tradable. Like
that's a start.
that's pretty much where it
Have you ever
lands.
have you ever tried to do some investing on your own? Have you ever tried anything like that? Have you ever tried opening up an
No,
account and buying some stocks? No?
no, I've done investing through Edward Jones,
Sure.
but I wasn't the one playing with it, and I was with a mutual fund.
Okay.
Mhm. So let's talk about stocks. Educate the least knowledgeable person listening, which might be me. I want you to speak to the least knowledgeable person.
Sure.
Talk about stocks, talk about your obsession and your passion.
Yeah, so I guess the first thing I would say is that on a high level, stocks represent an ownership stake in a business. These businesses that you'd mostly be investing in the public stock market are going to be really more or less the most successful businesses in the world. The reason that they made it to become a public company is because at some point somebody had a passion that was probably even greater than my own for investing in public stocks to start a business to try to solve some type of problem. So when you're investing in public stock market, you're investing in the passions of some other people that have created amazing businesses that have done so well that they've been brought to the prime time, to the public markets of the United States of
Mm,
America. Um, Stocks in the US especially, we have the most available, most liquid market in the world. It's very easy for anybody to join a brokerage company or work with a financial advisor to acquire stocks. One of the things I think that's a misconception that people have is that stocks are like a casino or that the stock market is like gambling, etc.
mm,
But that's not really the case. If you are investing in good companies and you are planning on holding these things for the long run, you have really an asymmetric probability of making money. Um, I can give you some stats on it, but say 74% of 1 year periods, the general stock market has a positive return. If we take that all the way to 10 years, you have a 94% probability over a 10-year period that stocks would make money over that time frame. And in America, over the last 100 years at least, over a 20-year period, there's not a single 20-year period in which the stock market has not been positive for investors. And so I think
mm,
oftentimes in my job, I have to combat some misconceptions that people have about the stock market being overly risky or being a casino. When in the reality, if you sit at a casino for days, you're going to lose money. Certainly, the house is going to win. But the
Right.
longer you invest in the stock market, the greater the probability you have of making money. And so I educate people on that concept first. And then
Mm-hmm.
secondarily, I get into what constitutes a good individual stock investment. And I reframe it as away from a casino and into investing in the profitability, in the earnings, in the revenue of companies that you love. You can buy, you might, what kind of phone do you have, Misty?
It is a Motorola.
A Motorola, okay.
Mm-hmm.
So you can buy Motorola stock if you'd like. And whenever you go to get a new phone, the revenue or the money that you give to Motorola as a stockholder of Motorola gets to come back to you in capital appreciation of the value of that stock, or maybe in dividends that are paid out, of that company, of that stock. And so I try to reframe a lot of these conversations to my clients as really, you get to have an ownership stake. You get to be an owner of a piece of all of these businesses.
Mm-hmm. I love that. And I've never heard anyone talk about stocks in this way. So it gives me an emotional investment. You mentioned I am buying into somebody's passion and I'm supporting their passion. Like that gives me an emotional investment to the stock market. I've never had an emotional connection to the stock market until this very moment.
Well, I'm honored to provide you that perspective. That's how I feel about it. That's what makes me so excited.
Well, now I see where your passion and obsession comes from because it's not just about money. You are investing in other people's dreams, their passions. You're making a difference that way. And then, like you said, it's like, okay, if you have an iPhone and you invest in Apple, every time you go to buy an iPhone or an Apple product, you know that you're reinvesting in yourself.
Exactly.
That's
Yeah,
so powerful.
yeah, I mean, I have clients who you might have Verizon as a carrier. Well, if you hold enough Verizon stock, you may be getting enough in returns to pay for your monthly Verizon bill by the time you're in retirement. So, and you can take that across every single business. Maybe, do you have a mortgage, Misty?
No, I do not.
Okay, neither do I, but you have a living situation of some kind though. So you could buy in,
Yes, I do have a living
yes,
situation.
you have to live somewhere. And so whether it be investing in JP Morgan that does a lot of mortgages because you own a house and getting a piece of that interest back to you that you're paying to the bank for that mortgage, or maybe you just want to own a residential real estate investment trust to get a
Mhm.
piece of your rent back by investing in a company that you may not be directly paying that entity rent, but you're paying some entity rent, and that investment can pay back a portion of your rent to you by owning it. So that's how I try to frame the conversation for people as much as I can around what stock ownership really actually fundamentally means.
Wow, that is such a smart and tactical approach.
Yeah,
Love it.
thank you. Thank you.
Oh my goodness. I knew this was going to be a good conversation. I didn't know what we were diving into fully, but this is amazing.
Well, thank you. I appreciate it. I'm having a great time so far. I know we'll continue the good times.
Yeah, definitely. Do you share this at a broad spectrum? Do you speak in front of crowds?
I've never done any big speaking engagements or arrangements, but I'm certainly not shy.
Yeah, clearly not.
Yeah, yeah. I did. I mean, I mentioned to you, I was in this men's a cappella group in college and we performed in front of 2,000 people. And there would be
Mm,
we would have two big shows in the fall and the spring. And we would sell out. I went to UW-Madison, so we would sell out Capitol Theater at Overture Center or the Orpheum Theater, which were anywhere between 1,750 and 2,250 total seats. And so I think
mm,
that performing background has given me a level of comfort to get in front of crowds. And public speaking is actually rated as the number one fear for most
hmm.
people.
Yes,
I do not have that fear, thankfully.
it took
Do
me.
you ever do big like group stuff?
Yes, I do.
Yeah.
So I've spoken in front of thousands online, and I have spoken in front of groups in person, and I've done my largest audience to date as of last week. So that was fun. And
Awesome.
this is a lifelong journey for me. It started when I was 10 years old. I just had this knowing that I would be a public speaker one day. That was the second scariest moment of my life. Second scariest. So when that came, I was like, well, okay, I'll start chipping away at that. And I started doing solos with my choir in front of large audiences. And I probably didn't sound good, but at least I was getting up there and I was in front of the lights and the people and all the things, and the words came out. Wasn't concerned about it being great. I was just concerned about getting it done. And I have been pushing myself as a speaker since. And it's definitely morphed into general type of speaking. So in that space, I have worked on my shyness because I don't seem shy these days to people, but I was incredibly shy as a child. So I've had to work on that and be assertive. For me, it's learning how to be assertive and have conversations with people and talk to people and all those things. So communication is a huge part of it. And then putting myself out there as a speaker in various ways. So a huge Facebook platform. I used to speak on a weekly basis, and that's where I spoke to thousands. And I have spoken through interviews like this, TV interviews, that type of thing. I've done a lot of group coaching in person, online, small group presentations. So workshops, trainings, that type of thing. And then speaking with maybe my corporate office, like I have a corporate client where I will speak to their team. So my speaking shows up in a lot of different ways. But on Tuesday, I got to speak in front of my largest audience in person to date since I was on stage singing, which was 100 people.
Oh, wow.
So, yes,
That's awesome.
um,
How did you feel, coming into that and going out of it and during it? Like, how was that experience for you?
I slept well the night before.
Okay.
And I felt so at home and comfortable because of the decades of work. I'm 43 years old and I'm not bashful about my age. So being very comfortable now as opposed to when I was 10 years old, not so much. But it was a huge moment for me. It was one of those moments where you spent a lifetime, like the Olympians, they spent a lifetime training for a moment. And that was me training for my Olympic moment, right? It was, oh my God, speaking to 100 is way easier than speaking to 20.
It really is. It's almost like the more
So much
intimate it
easier.
is. Yeah. The
And
smaller,
I,
intimate it is, the harder it is.
it is truly. And I was like, oh, I feel so liberated. And I was so jazzed afterward. I couldn't sleep. I was like, this is epic. I'm so proud of me after 30 years, you know. Uh, It was great. And I was like, how do I find more audiences like this? Like I was addicted. I was like, oh my God, I can't believe how much easier this is.
That's so awesome. Yeah, there's a high you get after walking away from any kind of performance, let's say, or speaking engagement that's hard to replace, right?
Oh God. That was the best high I've ever had in a speaking environment. I was like, I had to go to my neighbor and talk with her because I was so jazzed. There was no chance that I was going to sit still. So it was awesome. So I asked you about speaking because the way that you present stocks and the way that you can attach an emotional component to it and an emotional tie to it, and it just makes such sense. You simplify it in such a way where it's like, well, duh, that's amazing. Can you do workshops? Can you do stock education workshops or vetting, like that type of thing? I just really see that for you moving forward. Sorry, I have to take a moment to say that because you have such a powerful gift, and I would love to see you do one to many in that space.
Well, thank you. I really appreciate those sentiments. I would definitely be good in the setting that you're describing. I think a workshop or
Mhm.
something like that um, would be a vehicle for me to get in front of as many people as possible. That would be good for my personality and for my general skill
Mhm.
set around speaking. And then to do it in person or even sometimes on Zoom, of course, but to do it in person, you can really feel people's passions when you're in the same room with somebody that loves what they're doing
Yes.
and loves what they're talking about. You can feel it. Now, obviously, I work in a fairly regulated industry, And so depending on the size of the groups and things like that, I just have to get compliance to be able
Mhm.
to approve them. But that would not stop me. I have looked into maybe connecting with colleges and speaking in a finance class and just getting in front of as many people as possible in that kind of way.
Mhm. Yeah.
Really, the key or the hardest part of it is like, how do I arrange these arrangements? I guess how do I get these speaking opportunities to perform a speaking engagement? That's really where the rubber hits the road mostly for me.
Okay. Well, may I suggest some things?
Of course, please.
Number one, when we endeavor to start something that is in alignment with our chosen path, the opportunities will present themselves, even if you're the one creating your own audience. So you have that opportunity. So, okay, I'm going to put together a stock workshop. I've not heard of one of those. So
Okay.
that is going to create you a blue ocean because I've not heard of it. And I've heard of all kinds of financial trainings, but that's something that I've not heard of. So you want to look for your blue ocean opportunities instead of a red ocean that's full of blood. Okay. Makes sense?
Yeah,
Blue ocean
absolutely.
is clean, right?
Yeah.
It's wide open for you. So then you just start. Say, okay, I'm going to create this workshop and run it through compliance. And then you start holding it. Hold your workshop, put it out there to your network and see how it grows and develops. And then, of course, you're thinking about reaching out to colleges. If you put together this workshop, then you have a presentation already ready to go.
Oh, I love that. That's a great idea. So it's kind of like create the vision of what you want to share with other people first, and then just start inviting people. And at first, maybe not that many people show up, but
Correct.
maybe over time it builds.
Hmm.
How frequently, I know we're just spitballing here, so how frequently do you think that you'd recommend or try to put on a workshop like that?
If you're doing the same topic over and over again, I would say once a quarter.
Okay.
So then you have opportunities to take that workshop to businesses. Maybe a business wants you to come in and present for the employees and talk about stocks and how you present it. It makes so much sense because most people don't understand them. And most people have the wrong perception of what to do with stocks and why the stock market is there. So you never know what opportunities will open up for you. So if you did yours once a quarter, that leaves you room to go and speak at a lot of different other places. Once you have it run through compliance for your workshop, you're good to go,
Sure.
right?
The other thing that comes to mind is where to hold the workshop, because my office doesn't have enough space. Are there maybe public conference rooms that you can rent or things like
Mhm.
that? Just thinking out loud, spitballing again.
Yep. So you can look at different spaces. So the workspaces where there's a bunch of different businesses in there, you can maybe hold the workshop and advertise it to all the people in the workspace. Or the library usually has a space and you can rent that out. It just really depends on what you think is going to work best for you. And there may be other businesses out there that want you to use their space because it gets them exposure. So we want to think about, is it beneficial for the business to have this exposure? You want to make sure it's not a competing industry.
Yeah.
Yeah.
For sure.
So, hey, let me approach this business. They have a great space. Would it be beneficial for you to host my event for me? Because then you get free foot traffic. So, thinking about it that way, I know that you'll find a space. And you
Awesome.
don't want to pay. If you can get away with not paying straight away because you're testing it out, it's the best way to do it.
Yeah. Oh, that sounds great. I really appreciate that. Those insights. I never really thought about doing that. I mean, I have some clients where I manage a 401k and I'll go and talk to their employees.
Mhm.
But outside of that, I've never tried to make my own speaking arrangements or
Mm.
seminars or whatever. And those can really be a good way to get in front of more people, as you've described. And
Mhm.
yeah, thank you. Thank you for thinking of that and bringing that to my attention. I appreciate you. Sometimes you don't know what you don't know, you know?
Exactly.
Yeah.
And I want to see you succeed even more. So, of course, I'm going to share that information with you. And your 401k clients, if it's okay with your company to maybe then, once it's through compliance, to reach out to the client. I don't know if it's okay with your company to do that, to say, hey, I would love to give you this free training, right? You've done the 401k thing. I would love to give you this free training on stocks.
Yeah, I mean, I don't think there would be no issue with that. You know, the clients within a 401k are all reasonable individual prospects in and of themselves, you know, in
Okay,
terms of developing a personal investing relationship outside of just their participation in that plan.
awesome.
Yeah,
Well, yeah, if you can utilize what you got, do it.
yeah, absolutely.
Definitely. That's the easiest place to start. It's like, okay, who do you know already?
Yeah, yeah, absolutely.
Yes, and one of your networking groups, I know that you can float around, maybe, possibly, I don't know. Like it's an option.
Yeah. Yeah, you can. It's you know, just with our 4BR networking group, it is you can speak if you're not represented. So
Mm,
that's a little bit the hard part for me as a financial advisor is that those spots are usually taken up with
gotcha.
networking groups. And so it's kind of hard to have a guest speaker role when there's a financial advisor in like every single
Yeah,
group. But
sure.
um,
You could
yeah,
test a group.
yeah. I I'm gonna try my best to try to get in front of as many of the groups as possible. I do like yeah, I do like speaking about this stuff, and I think it's clear to everybody that ever has spoken with me about it. So
Uh, yeah, you changed my world today. So people need to hear you.
thank you. Thank you.
Of
Very humbling.
course. I am happy to be of service. Next question is, how do you vet a stock? I think you touched on it a little bit. It's like what is going to put money back into your pocket, so to speak. Like you're investing in something that you're using, but how do you vet a good stock without crossing any boundaries, right? We're not going to give people investing advice, by the way.
Sure, sure. Yeah, I mean, you know what's so fascinating about the stock market and about markets in general is they're very dynamic things, and there's so many different ways to, so to speak, skin a cat. There's so many different ways to try to identify a good stock, a good company. There are qualitative ways. So a lot of people are just going to buy things they're familiar with. If you like Apple or if you like whatever, it doesn't really matter. That's just one particular company. But if you like the product that an organization provides, or you like the service that an organization provides, you have a good experience with them, that product or that service, it seems logical to invest in that product or service since you yourself have a belief that that's a good product or service. You have to assume you wouldn't buy that product or service if you didn't like it, if you didn't see value in it.
Mm,
And so that's one way. There's also a lot of ways to look at fundamental analysis. So when you are buying a piece of a company, you can look at what you're paying for that piece of that company. There are several metrics you can use to try to identify whether you're buying something that's at a good value or not. Think of it, I always try to relate it to the real return on a stock is going to be the earnings of that company over the long run. So the stock price is going to do whatever it's going to do in the short run, but ultimately you're buying the profits of that business over the long run. And so
mhm,
looking at the price you're paying relative to the sales or revenue of a company or relative to the earnings of a company is another good way to try to identify good opportunities. So just to put it very plainly, if you had $100 stock, you have two stocks, you have $100 stock, they're both $100.
mhm,
One of them earns $25 a share, so $25 on 100. The other earns 2. Obviously, the $100 stock that earns 25 is a better fundamental purchase for you, the person that's buying it on 100 and getting $25 of earnings,
Mhm.
than the person that's buying the $100 stock that only produced $2 of earnings. Now it seems really that seems fairly intuitive. It's like buying a property for 100,000 that cash flows 25,000 versus cash flows $2,500. You're going to want the one that cash flows 25,000 all day, obviously. The hardest part about the stock market is that it's never that simple.
Right? There's so
Because
many variables with companies.
exactly, and you don't know what the future earnings are going to
Right.
be. Maybe the stock that's trading at that has $2 in earnings that's trading at 100 is growing their earnings by 100% a year. And so, that $2 is going to be $25 in a few years.
Hmm.
But maybe that stock that's 100 that has $25 in earnings is actually going down. Maybe that earnings will be $2 in that same time frame.
Right.
And so you wouldn't want to own the stock that's $25 in earnings at 100 if it's going to be 2 or 5 in a few years. You'd want to own the thing that you're paying kind of a high current price for, because in the
Hmm.
future it's going to be earning more money. And so that's another way, kind of trying to do fundamental analysis on stocks to try to pick which ones are good.
That
And
makes total sense.
yeah, and there's combination of those types of things. Like sometimes the companies with the best customer service, on a qualitative basis, you really like them. And so you go ahead and buy that stock regardless of what they're earning, regardless of what the stock price is. Because on a
Mm.
qualitative level, you believe they're just going to continue to gain market share because they're the best company in whatever they do. So, I believe in high quality businesses at a fair price.
Okay.
That's more or less the strategy that I try to pursue, because that makes the most intuitive sense to me. High
Hmm.
quality businesses at a reasonable price. Um, the future is uncertain. I could tell you all day what I think is going to happen, but what I think is going to happen has no bearing on what actually is going to happen over the long run.
Right.
And so you need to make sure that you are reflecting on the choices that you've made and whether you're right over time when it comes to qualitative or even fundamental analysis of stock picking. Um, the last one I'll highlight, and then, is just that you can just follow price trends. So it's perfectly fair to say, I don't know what the best businesses are. I don't know what the fundamental earnings or revenue of companies are going to be in the future. So let me just assume that the market knows more than I do, and let me just follow the trend. So
Okay.
let me just buy stocks that are going up the most. I mean, that's a perfectly reasonable way of looking at it. Now, that comes with its own downsides and pitfalls. Like maybe that company is growing a lot, but maybe it stops. When do you know when to get out,
Right.
And so there's an entire field of technical analysis or of price, of studying of price, that you can study to try to understand what trends to try to follow, and when the trend has changed, when to jump out, when to get out. And so those are kind of really more or less the three different like high level ways that you can go about trying to select good stocks in the stock market.
I love how you've identified multiple ways of addressing the stock market and how to choose a stock for you. But one way might not work for another person because they're touchy feely and they're like, "Ooh, I feel this in my soul. I want to invest in this one," right? Like,
Yeah.
and they're not looking at the revenue of the company. And it may work for them, right?
I-
So,
It, yeah, it works for people all the time. Really, people that have there are people that have very intellectual ways of looking at this stuff, and they end up
mhm,
being wrong. They end up being wrong or right almost just as often as somebody who what you just described, which is, I just really like this company. I just really like this stock. I think it's going to do well, and who cares what the fundamentals are?
yeah.
So, yeah.
The way that you've explained this is liberating. What that does is that it liberates my mind to then, okay, when I'm ready to invest in the stock market, I'm going to choose the method that works for me. It's not one method fits all. That's not what we're saying here. It's choose the method that works for you. And I don't know about the listeners, but that liberates my mind. So thank you.
Of course, yeah. I agree wholeheartedly with you. I've done a lot of personal experimentation to try to figure out the method that is going to work for me.
Mhm.
Lots of trial and error, lots of success, lots of failure, I mean,
I'm
lots
guessing
of failure.
failure than success.
Oh, for sure. I mean, way more. In fact, the success inflates your ego and it makes you think that you can't be wrong. So
Mm,
it's almost better as a young person in financial markets when especially when you're directing investments on your own, to actually fail first. Because when you have a small amount of money, it's not a big deal if you fail. If you
sure.
blow up an account with 2,500 bucks, that may seem like a lot when you're 23 years old. That's what happened to me. I started
Mm,
trading stock options and I took an
okay.
account from 2,000 to zero. But I learned a tremendous amount from that. And now that I'm investing not only my significantly more than $2,500, right? Sums of money, but
Uh-huh.
I'm investing other people's money. I have got the practice that I needed with smaller amounts so that I'm not risking in the same way much greater sums of money that have much more impact on my lives and my clients' lives.
Mm,
Um, and so I couldn't agree more about failing with trial and error, failing when you're young, learning more from failure than you do from success, and the
right.
importance of that in growing and of making yourself a more successful investor over the long run.
What you just said, I believe, makes you more credible as a financial advisor because you're not coming from a place of ego or arrogance or pride. You've already learned how to check all that at the door.
I don't know how anybody can make it through financial markets without being, without taking a dose of humble pie, honestly. It is challenging. It is a challenging business to pick and select the correct investments for any amount of time. So
Mm,
I'm glad that you agree with my perspective and that yeah, that humility is incredibly important.
100%. When you're dealing with money, especially because I have seen money bring out the worst of people. And when you slip into that space of arrogance where you're like, oh, I did a great investment here. So now all the rest of them, I'm going to be spot on. Well, that's a recipe for disaster. And I do not want somebody like that managing my money.
No,
So thank you for providing an amazing service to the public.
proud to be doing it.
Well, oh man, I have so enjoyed this conversation with you. We need to get wrapping up. Before we go, please tell me and please tell my audience if somebody wants to work with you, how do they do that?
Yeah, so I mean, it really starts with a fairly simple outreach. Give me a call. I can share with you my contact information. And usually we just sit down, we have a conversation. There's no real end in mind in terms of whether you choose to work with me or not is not a big deal. I just like to be an educational resource to as many people as
Mm,
possible. I'm not the right person for every person. And
sure.
people out there are not the right clients for me in every single case. We all have different personalities. We like to be communicated with differently.
Mhm.
So, in terms of selecting a financial advisor, working with the right person, it all comes down to committing to starting a conversation and then being honest with yourself, me being honest with the client being honest with me about
Mhm.
whether we believe this is going to be a good fit. And so it all starts with a no pressure conversation, reaching out via phone call. We'll set up a meeting. We can meet for coffee if you don't want to even make it as formal as meeting in my office or for lunch or really whatever, maybe even for drinks. But, the point is that it should be relaxed and introductory in a very informal way in order for us to get to know each other to see whether a relationship like one of managing your money and helping you to reach your financial goals
Mhm.
is going to be right for both parties.
Excellent. Now, you touched on something that I tell everyone. Not all financial advisors are created equal, so please interview them until you find one that works for you. So thank you for touching on that. It's such a a valuable point that a lot of people don't understand. They think all financial advisors are the same. They're not. You all have different personalities. You all have different methods as far as managing money and all the resources. So amazing. Thank you. I am so pleased to have this conversation with you. What is your business phone number if they want to reach out to you?
Yeah, so that's 303-231-9090.
And ask for Devin.
Yes, ask for Devin. I do share an office with a great other financial advisor, but I'd appreciate you if you touch base with me first.
There we go. Excellent. Now, do you work with people out of state?
I do. Yeah, I have clients. I literally across the entire continental U.S. So I have a client in Alaska, I have a client in Florida, and every single state in between. Well, maybe not every state, but I can get licensed in any state via my licensing with FINRA and the SEC. So
Okay.
no worries with doing remote meetings and things like that with people across the entire country.
Excellent. Thank you for sharing that. Now, for the people who are local in Denver, you can go see Devin in person.
Yes, please do. I like people in
Yeah.
person.
And like you said, even if you just have a question, because he is so knowledgeable, reach out. It doesn't mean you have to hire him. Just reach out.
No, I love being an educational resource, and I'm not the type of person that gives a hard sale. So I let my
Excellent.
clients, come to me once they're ready.
Wonderful. Well, thank you so much for your time today. We are going to go ahead and wrap up, and I hope to have you back in the future. This has been a wonderful interview. Thank you.
I've loved it, Misty. Thank you so much for the opportunity. It's always a pleasure to chat with you.
Oh, wonderful. Thank you. Well, everyone, until next time, we will see you soon.
Thank you for tuning in to the Wealthy Mind podcast. Please be sure to download the Wealthy Mind app today and make sure to support your local Dress for Success.